Welcome to the Tax Magic Podcast. Today's topic is something that Kathy hates with a passion. We are going to talk about the mistakes that we see in clients' accounting.
Hate accounting.
Hate accounting.
Hate
Now,
accounting.
we're going to start with the first myth. What does CPA?
Certified public accountant.
All right, so they're accountants.
Yep,
but I would not call you an accountant.
No, I don't like it.
So it's a big difference. Yeah, so
Well,
what's the difference?
you have different. A CPA is a certificate that you get when you pass the CPA exam, which I did all 4 parts at one time. But I don't like accounting. But there's different segments of accounting. There's audit, which sucks. There's just bookkeeping, which sucks. But there's tax that is magic because it's just great. It changes all the time.
Does tax require accounting?
Well, it requires somebody to do accounting.
Someone needs to do the
It's
accounting.
not going to be me.
Right. So what do you do? Do you find the mistakes in the accounting? Because no, we do.
Sometimes I don't look because I know it's going to be so bad.
Okay.
And I send it back and go, I don't think it's done yet.
Got it. So that's one of the ways that when you see mistakes in the accounting.
Yeah, if there's more than 1 or 2, you go, okay, somebody else has to look at it because I'm not going to fix it.
Right. So,
but it's going to be wrong. But it's materially wrong.
So what I see is a lot of these accounting companies. You've got your QuickBooks. You have your Xero, Xero.
Yes.
That one. Yeah. I see a lot of new ones now.
Sage and Peachtree and Wave.
Yeah, because they're all trying to compete with the big behemoth, which is QuickBooks Online.
Correct. So I don't like online either, by the way.
But we have to deal with it.
No, I have desktop.
I know there's some desktop.
No, they still kept it. Even though they said it was going away.
Yeah.
They brought another backup right there because we bitched so much.
Yeah. Well, anyway, so in the accounting, I know that they try to make it so easy and they make people think that that they can just set it up themselves.
But they can't.
So what would you have them do instead? Like you have a client. Again, we talked about some of the things where you should call your CPA.
Call a good bookkeeper.
That actually will set it up for you first.
Well, yes.
Like set up your categories. Have a professional set up those categories. And then you can take it from there if you kind of know how to enter the...
There are some CPAs that'll do it. I won't. Their bookkeepers usually better, but bookkeepers aren't always trained either. The big mistake,
Where are the biggest mistakes?
Biggest mistakes. Showing a loan. You got going out and getting a loan, I'm going to show it's income. It's not income. It goes on the balance sheet.
Yes. Another one I saw was, they buy some equipment and they just expense it all.
Which is
as an expense.
Right, but you can do that and put it in the books as Section 179 as long as they have income in your fund.
So why is it that we really would rather have them categorize it correctly as a fixed asset?
Because it's the right way to do it.
I would also add, because there are so many different options that you have.
Well, yes.
For how you're going to take that deduction.
Yeah.
Kind of one of the things of your tax magic.
Well, it's magic, yeah.
You know when to take the depreciation. You know all of those rules.
Why?
I mean, you can advise them.
Yeah, or just
if they accidentally just bury it in the expenses.
I don't even know they have.
You don't even know they have.
Well, and then you can make the election to do the Section 179, which could be taken away if they audit you and find it.
Okay, so we're getting really high level here. Section 179. That's
Section 179.
What is Section 179?
It's depreciating everything in the first year as long as it's under a 20-year asset. You can depreciate and take the whole expense in 1 year.
How does that help me?
Well, it reduces your income.
And then because I have less income, I what?
That's tax.
That's it.
I didn't know what happened.
Sometimes we got to get down to the very granular, the nitty gritty.
Well, the idea of deductions really are, you're buying something at a discount, basically. So I'm instead of paying full price for a car, I'm going to really pay half about the car because I'm no longer going to have to pay the tax on it, kind of thing. It's a percentage thing. It's kind of a game.
Am I right? The right house to look at it this way. I went, okay, either the government's going to get that money, or I can at least have an item that I can use in my business, and I get to deploy at least.
Yes, but it's not dollar for dollar.
It is not.
That's where the biggest mistake comes in.
Right.
They think that because I buy $100,000 car, I'm not going to have to pay $100,000 in tax. That's not the way.
Not true. Yeah.
That's not the way it works. So
Okay, so now back to the accounting.
I like
It's
Shit's
safe
Creek.
in accounting.
Schitt's Creek, the write-up people. They just write it off.
How important do you think our accounting is in business anyway? Like, as long as I know how much I made and I spent money.
But it's not all deductible. Therefore, the write-off people would be a problem.
Okay.
So the idea, though, is that the way I explain it is the accounting is your spine. When you're looking at the anatomy of a business, so to speak, the accounting is your spine. Well, knowing where to put it becomes your arm, and so your arm's not going to work unless it's in the right place. If you put it down on your knee, it's not going to work the same. So then you add the muscles, which is magic, and the skin, which covers it up, which is usually fraud. Not really, I'm just kidding. It's
Be careful, or I'm not going to sit with you anymore.
I always get in trouble. But the idea is it's the outer layer to put it all together to hold it together. Hold it in the book, yeah. So if you don't have your spine right and you don't have your muscles working right,
So if your spine is weak, you'll lose it.
everything's weak. You'll lose.
Mm-hmm.
You'll lose. And if you don't do accounting, I had a client who actually estimated it all for years because,
That was close enough. Yes, I have seen that too.
Yeah, and it's really, if it's not material, it might be close enough, but what's material for me is very different than what's material for, let's say, a bookkeeper.
Why do you think people resist getting a professional bookkeeper?
It costs money.
I mean, when I look at all of the business deductions on a lot of these, businesses,
Mhm.
the bookkeeper isn't exactly outrageous.
No, but they want to keep their own money.
Even that $100 a month or that $400 a month.
Yeah, what if they do it wrong anyway?
Well, we've had that, but all right.
But that's why.
Yeah.
That's why.
Yeah, so we run into that all the time.
All the time. I hate accounting. It sucks.
Mm-hmm.
And you can't estimate. Don't care what somebody says. You're not supposed to estimate it. Unless you have no other way to report it. Because there's a Cohen rule out there that says you don't actually have to have the receipt if it's ordinary necessary for your business. Like, for example, the phone. I don't have a receipt for my phones, but I know I'm supposed to have a phone. So what's the normal average cost to use a phone? That will be something you can estimate. Yeah,
you will absolutely have to have a receipt.
But no, that'd be one that would be, you would win if you were audited simply because of the Cohen rule.
What about your clients who have excellent bookkeepers?
I love them.
And then others who do not. What would you say the opportunity cost is for those people who do not have?
Well, I bitched them a lot.
Okay.
So the opportunity cost of me yelling at them might be a problem. And a lot of people are afraid of me because I used to go off like a lit Roman candle. I don't want to do that.
Okay, so that's a downside.
Yeah,
You're less likely to want to deal with.
Well, I don't want.
It's not organized.
Nope, don't want to.
And is this where your hatred of accounting has come from? Is it from your client's bad accounting, or what is this?
They're fucking boring.
Okay.
It's just numbers. It's boring. Yeah.
Their history. Was there a trauma moment?
Yes,
When accounting
yes, it's boring.
brought you to your
Boring. It's just boring.
Okay.
It was a great living, but it's boring.
All right.
And when I discovered tax, I went, "Ooh, I love this." It's like practicing law without going to law school.
Right. Okay.
Like practicing. I'm not doing it, but it's
What's the last thing you would tell your clients?
hire a good bookkeeper.
Okay. That's
Because
you've been begging them for years.
yeah, even if it costs you $400 a month, it's $4,800 a year, it's probably going to save you more than what it costs you.
I have seen that over and over.
Over and over.
Yeah. Yeah. That is it for today's episode.
It's a wrap.
I don't think we can talk about accounting anymore without it becoming incredibly boring.
Yeah, we need drinks.
Yeah, exactly. All right, on that note.
It's the Tax Magic Podcast. The more you know, the less you owe. Join us for the next episode. We don't know what we're going to do.
No.
But it'll be fun.
This content is for educational and entertainment purposes only and does not constitute professional advice of any kind. Always consult with your tax professional. Be sure to read this full disclosure. Listener discretion is advised.
Thanks for tuning in to the Tax Magic Podcast. because the more you know, the less you owe.